The issue with chemical companies inevitably is that they are linked to the world of commodities, and we are seeing incredible upheaval in the world of commodities over the last few months because of what's going on geopolitically and otherwise. And sometimes with commodity companies, a key raw material will go up in maybe 15, 20, 25% and the margins will vanish. Do you see yourself being able to navigate this landscape successfully, or is there a real and present danger of margins getting hit as this volatility in commodities persists?
See, now broadly speaking, definitely yes. All raw materials for the whole chemical industry comes from crude oil, and crude being what it is, prices of most raw materials are going up. Now, how much which companies can pass it on, again, comes down to what your specialty is, what your niche is. We are thankfully in some of our products, we have a formula-based pricing where we are able to pass on a lot of that price increase. And similarly, if the price goes down, if crude goes down, our end product price will also go down. And now another issue that the industry is facing is the logistics issue. Logistics prices have gone up 5 times over the last 1 year, whether it's freight costs to US to Europe, and somebody somewhere is taking the hit. Now, a lot of companies are obviously somebody is making money also. Shipping companies are making money. Companies that sell domestically and compete with imports, they are able to jack up their prices because import freights have gone up. Similarly, as commodity prices have gone up, chemical companies that are into more commodity type of chemicals, they are making a lot of money, but eventually this is not sustainable. That's my view. And I do hope at some point things will stabilize and go back to normal, because the more further down you are in the value chain, they are taking more and more hit on the margin, and this is not sustainable on a long-term basis.
The other issue, Vinati, is the issue of cyclicality. I mean, that is probably the reason why when you joined the company, chemical companies would trade at 10 PE multiple, and pharma companies, which are seen as less cyclical, would trade at 30 PE multiple. Has anything changed on that front, or is this still a boom-bust kind of a cycle in chemicals like it is in many commodities? Some years will be very good, and it will be followed by a lull of a few years again where the business is down in the dumps.
See, again, now, each chemical company is different. It's a very broad sector. There could be some products which are not cyclical. For example, if you make a chemical for the pharmaceutical industry, then by definition, like you said, it's not a cyclical product. It's not a cyclical industry, So it again depends what your product goes into. Specialty chemical companies will do fine, in my opinion, because they do have the ability to pass on the price increases, and there is less cyclicality in that business. And frankly, I don't think ever before the world has been so bullish on the chemical industry in India. So it's really the first time that this is happening. So, if it was a cycle, then you would say, okay, maybe in 2000 they were bullish, 2010 they were not, and now in 2020 they are. But it's really now that the India story is coming up in this industry, at least. And maybe because it's been so small over the last many years, and there is hope for growth, and there will be a shift from China to India.
This is another interesting point that you brought up, that it is still relatively small. The question for a lot of people is that, chemical companies start off small, then they get to a certain size, and then they are not able to often make that big leap, which a lot of these Sun Pharmas and Dr. Reddy's were able to do in pharmaceuticals. They became multi-billion-dollar franchises. Now, you have global dominance in 2 products, but those 2 products account for 70% of your sales. If you add a third product, it's probably 85%. Will you be able to diversify from these core products to become a really large company? Not a 3,000 crore company, but maybe a 10, 15,000 crore company.
See, again, now we've made antioxidants, butyl phenols. These 2 line of products combined itself will add about 900 crores in revenue for us. And see, but now to reach 10,000 crores, 15,000 crores in revenue, what the industry needs is a lot of consolidation, which has so far not happened in the chemical industry in India, in my opinion. It's very fragmented. It's still very promoter owned and owner driven, and everyone's satisfied with their line or basket of products. And when the consolidation starts happening, which we did see in pharma has been ahead as far as the M&A space goes compared to the chemical industry in India. That's when you will see the real big growth, or the companies becoming as large as you are expecting them to be.
Do you think about M&A actively at Vinati Organics? Because you use the phrase promoter-driven company. You're a promoter, but you're a professional as well. I mean, you studied overseas, you joined the company at a young age. So, I mean, the line is a bit blurred between promoter and entrepreneur or professional. So, do you think actively consider at the board level or the management level buying smaller companies and consolidating and becoming larger?
Yes, absolutely. We are shown deals. It's something we have looked at. Now, my big question really for M&A is what is it a strategic acquisition? What value add do we bring to the table? And because we are so niche, we are into such specific chemistries, what has made sense for our company's organic growth is to keep investing in our strengths and growing horizontally and or vertically. It's very difficult to find companies that are in the similar line of business as we are. And I don't mean just making chemicals. It has to be the same chemistry or similar processes, or there has to be some synergy over there. And that's what at least we've not found for our company specifically.